Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the fundamentals that move those markets. Another exciting week, certainly one without as much volatility as the previous week, but plenty to go around nonetheless. We had a lot of news, obviously, pushing gold and silver, not the least of which is the rumor of productive peace talks between Russia and Ukraine. Yesterday, that caused a pretty big drop down to what Miles will show as a key support here. And that's going into the end of the quarter. I think that we'll see some volatility as we close the quarter. But what happened yesterday? It bounced right back up off of that support level because those rumors kind of broke down and the talks weren't as productive as we expected. So that, despite some dollar weaknesses, we'll point out as well. So Miles, you want to jump right into the technical analysis on gold?
Like you said, we're looking at a pretty big up and down earlier in March, but similar move over the last week. Gold's actually pretty much dead even since we recorded last week, although we did have a little bit of up to around like 1965, and then a decline back down to just under 1900, but we've bounced right back up to where we started a week ago. So playing in between the 50% line and the 382 fib, we've now put a double bottom in potentially. I would like to see gold break above and set another higher high, a third higher high in a row, and then hopefully start stepping up from there. We need to see gold pushing above 1965 on the top end to continue this growth pattern. On the downside, gold does have stronger support down at around 1854, which would be a pretty significant decline from here, another $50 down from the previous bottom. But we're not below the current bottom yet, so let's focus on where we're at.
And by that current bottom, you mean the one we hit yesterday at around
Correct.
1895?
Around 1895, which we also hit about a week or so prior, week and a half prior.
So despite that bouncing around in gold, what didn't bounce around is the ratio. Silver's sort of tracking with gold for the most part, with that ratio still around 77.5 to 1. Still no indicated moves there, so let's jump into that chart.
Silver, obviously, a little bit more aggressive. That's the nature of silver. Cheaper metal, higher highs, higher lows as far as percentages go. But when you look at the ratio, like you mentioned, that tends to average out over time. So very similar move. Silver also, just like gold, pretty much where we started with a jump up. Now, silver did set a lower low as it came down this past week, all the way down sub 24 to around 23.95. That's your longer-term 618 fib, and we've come back up all the way past the 50% line, all the way up to the 382 fib. So a big jump up to around 25.75, big drop down, sub 24, and now we're right back in the middle where we started a week ago. So strong volatility in silver, hasn't changed the ratio much because we saw gold do the exact same pattern. And once again, just like I mentioned with gold, I would say your top-end support, you need to get above that like 25.70 high. I'd like to see that break out and start pushing up from there. On the low end, it would be a lower price below that 23.95 low that we hit earlier this week. So big range in silver, a lot of volatility there. And with that ratio, good opportunity if we did get another decline.
The big story to me with silver is not the spot price, it's the premiums. And we've alluded to this a little bit on previous shows. But what we're witnessing right now in the silver market is a premium issue. So why in the world would you go buy a silver American Eagle right now, other than you just want form over function?
Well, because you can see them on TV.
Well,
if you can't sleep,
right.
They're popular.
But the problem is, let's just take that same gold-silver ratio, okay, 77.5 to 1 today by using the spot prices. If you use the American Eagle prices, gold over silver, that ratio drops 20 points. That's a 20-point move against you in the ratio. It takes it down to 56 to 1, which is below the 50-year average. So be very, very careful about what silver you're acquiring. Let's talk about it first, because we can avoid those premiums with other products, and it won't work against you on the ratio. So if we say silver's at a great value because of the ratio, again, be careful of those premiums, taking that strategy right out of your pocket.
Right. You don't necessarily want to say not all silver is created equal, because frankly, it kind of is when you get into the investment grade quality of things, but it certainly isn't all priced equal. And a big fan of silver bars right now, as a lot of our clients know.
Totally. And we're not seeing that in platinum, right? I mean, There's some premiums in platinum coins, but let's look at what you've seen this week in platinum. And, that's been exempt from those premium issues.
Yeah, a couple percent difference, but nothing like silver. Same with gold. A couple percent difference between coins and bars. But that couple percent difference is completely made up for in the platinum chart right now because unlike gold and silver, platinum actually is down. Platinum's down about 1% since we talked last week. Platinum has been in a clear declining trend. We've had what looks like two consecutive bottoms in platinum, March 15th, and then here just a day or two ago, but with no real RSI or MACD divergence, so you can't really say you're expecting a dramatic reversal based on traders. However, platinum did hit the bottom of a channel. If you take the top end channel, begun back in November, and then a new high put in back at the beginning of March, and the bottom end in December, and now if you draw a parallel line, you're looking at hitting a very solid parallel rising channel in platinum here just this week. So it is possible, if that channel holds, that you actually could see platinum reverse back up, and we could be looking at new short-term highs pushing us above 1,200. Now I think we're weeks out, maybe even months out from something like that happening, but it's very likely platinum could be on the rise here over the next number of months.
I know a lot of our clients' minority positions in platinum would welcome that move and need a little encouragement because even though we've been early, we're not wrong. You know, and all this really without a whole lot of activity in the U.S. dollar either. A lot of what's going on with metals prices has more to do with news and monetary policy and geopolitics and less to do with the currency. Your U.S. dollar, have you seen anything earth-shattering there?
The U.S. dollar is in a very defined trading range between about 99.5 on the top end and about 97.8 on the bottom end. We showed this range last week. We've come right back down to it. So the dollar, like platinum, down about 1% since our recording last week. But we're at the bottom end of that channel again. A break below changes what you just said. So
Agreed.
Yes, as of today, not a lot of difference here in the U.S. dollar value. It's trying to figure out which direction, who's going to win that fight, the bears or the bulls. You're waiting for some type of channel breakout here that shows that either the bears or the bulls in the dollar fight have taken control of the market.
I'm anxious to see how the dollar reacts, if it does at all, to what Russia's doing with the ruble and certainly circumventing the U.S. dollar in its trade, which isn't a surprise. They almost have to circumvent the dollar, but accepting global trade with partners in the form of gold tied to the ruble, so establishing almost a gold-backed ruble trading opportunity right now. So that may do something to the dollar and cause it to weaken further if it causes a loss of confidence in the U.S. dollar. Not that it needs any help. Our own monetary policy makers are doing that. In fact, coming out of the Biden administration this week, they're just releasing a $5.8 trillion budget. And keep in mind, tax revenues only total $3.5 trillion. So that's a $2.3 trillion 1 year budget deficit, which is going to add to the debt. And the debt's already at $30.35 trillion right now and climbing. So nothing's changing. Nothing in the next year. There's no expectation of inflation changing. There's no expectation of debt changing. It's going to have a record tax hike. And all of these price climbs, Miles, from an inflation standpoint, is starting to destroy demand. And when it starts to destroy demand, what do we see? We start to see a rollover in the economy. Well, what's the bond market predicting? Yesterday, we had an inversion between the 2-year and 10-year yield in the Treasury market. Well, guess what? That's happened each of the last 6 recessions in this country. That prior to the actual recession, you've seen the 2-year and the 10-year Treasury yields invert. And unfortunately, the last one that was persistent was 2006, 2007, right before the financial crisis. So be encouraged, gold owner. Not a whole lot has changed, and the bond market is pointing to a recession.
Well, and you're absolutely seeing that in other commodities as well, from timber and what's going on in like new housing starts, from oil and rising gas prices. And there is a genuine concern I think we're going to be talking about here in the next 6 months, and that's the availability and quantity of food and food production out there with the rising oil prices.
Totally
we forget
agree.
about the cost of doing business in the farming community, and a lot of our listeners can attest to that because we work with a lot of farmers.
And that's a perfect example of how all roads lead to gold.
Right. So Biden can get on TV a couple weeks ago, like he did, and explain how anybody who thinks government spending has any effect on inflation whatsoever doesn't understand how markets work. So if you believe Biden, I have a bridge to sell you in the New York stock market. But if you don't believe Biden and you think that inflation does affect our economy long term and the government overspending is a big piece of that, it may not be a bad idea to continue putting a little bit of your assets into things like precious metals.
So that'll do it for this week's Golden Rule Radio. Thanks again for listening.
If you liked what you heard, you can hit the subscribe button, ring the bell, do the YouTube things. But better yet, how about you give us a call? Discuss your personal portfolio with one of the advisors here at McAlvany ICA. We can be reached at 800-525-9556. Thanks for listening and have a great week.